The IRS just sent you IRS Form 433A, and you're staring at 8 pages of financial questions that kind of feel like a trap. Fill it out wrong, and you could lock yourself into payments that you really can't afford. Leave something out, and they'll assume that you're hiding assets. What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled tax returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877-LEVY-KING, LevyKing.com. Almost anytime you owe the IRS, they're going to want you to do what's called a collection information statement, or Form 433A. I've seen this form destroy people's finances, but I've also seen it save them from thousands when done right. In this video, I'm going to walk you through how to do a 433. Okay, so this form is not optional. You can't like halfway fill it out. Wage earners must complete sections 1 through 5 and then sign. Self-employed individuals can skip section 2 but still have to complete everything else. If you are both a wage earner and self-employed, you get to complete it all. Another pro tip, always write NA instead of leaving blanks when you're filling out the form. Blank fields looks like missing information, and the IRS assumes that you either forgot something or you intentionally omitted something. So you don't want to be in that situation. Another trick, make copies of the form before you start filling it out, and then fill the form out in pencil before you complete the final clean version. Errors and crossouts, you have a lot of crossouts on the form, kind of raises red flags. All right, so section 1 is the easy part, but don't underestimate it. You'll list your name, your address, your marital status, social security number, and household members. Now, when listing household members, I need you, I want you, I implore you to resist the temptation to exaggerate. Only include people who actually live with you and who rely on you financially. The IRS is going to cross-check this with your tax return. So if you claim more dependents here than you actually claim on your 1040, then you can expect there to be some questions. All right. Now, you want to also disclose business ownership here. Many taxpayers kind of skip over it. That's a bad idea. The IRS is definitely going to find your LLC through public records anyway, so don't think that you're going to hide it. Okay, section 2 is for wage earners. You'll list your employer, your job title, your pay frequency, and your spouse's information if you are married. The IRS looks very closely at pay stubs. So if you get bonuses or overtime, go ahead and disclose it. They'll average your most recent 3 to 6 months any. Another trick is if your spouse doesn't owe tax, you want to note that clearly. Community property states can complicate things, but in most cases, your spouse's income can be at least partially excluded when calculating your ability to repay. Don't hand the IRS more information than they're actually entitled to have. Okay, so section 3 is going to be mostly background questions about your financial life. They're going to ask about lawsuits, bankruptcies, safe deposit box, large asset transfers, things like that. You want to pay attention to questions about transferring assets for less than full value. If you sold a car to your cousin for $500 last year, but the car was actually worth $10,000, the IRS wants to know that. Leaving it out kind of looks like fraud. All right, so also, if you file bankruptcy, you want to note the case number and the status. The IRS already has access to this information anyway, so you're not really hiding it by leaving it out. And here's the sleeper question people don't really think about: safe deposit boxes. If you check yes, that you have a safe deposit box, then you want to be ready for the IRS to assume that you could be hiding valuables. Okay, so next up is personal asset information. Section 4 is where most people underestimate. You want to list all of your bank accounts, your retirement accounts, your life insurance with cash value. You want to list vehicles, real estate, and even valuable personal items like jewelry and collectibles. So you don't want to forget digital assets. Yes, the IRS now asks about crypto wallets. So if you've got Bitcoin or other crypto, you want to disclose it. Failure to do so can also be treated as fraud. Another common oversight is life insurance. If your policy has cash value, it counts as an asset. Many taxpayers check term life on the form and sort of leave it blank, but if it's a whole life or a universal life, the IRS wants the actual numbers. Now, if your car is underwater, here's a trick. Right? So if you're underwater on the loan, you want to list both the value and the loan balance. Negative equity actually helps your case here. Okay, next up, we're asking about income and expenses. So this is kind of a make or break section. You'll list your wages, your interest, dividends, pensions, social security, rental income, and so forth and so on. Then you want to list your actual living expenses. Another pro tip, the IRS doesn't accept just any number. You're compared to what they call national and local standards. So if you spend $1,500 a month on a car, for a family of two or whatever, but the IRS standard is only, let's say, $600, then you can expect them to reduce your expense in this category. You're not going to get credit for the full amount that you pay. You're only going to get credit for what the standard allows. So another strategy here is you want to document special circumstances. This one is really important. Medical expenses, childcare, or a really long commute can sometimes justify being over the standard. You're going to have records, and every dollar you provide is going to be necessary. Every dollar that you prove to be necessary is going to reduce what the IRS thinks you can afford to pay. That's what I meant to say. For self-employed taxpayers, Section 6 and 7 are brutal. The IRS wants your business name, payment processors, bank accounts, accounts receivable, business assets. Then in Section 7, they're going to want monthly profit and loss. Don't inflate your income here. If the business fluctuates, you want to average the last 6 to 12 months. Overestimating income now is going to lock you into higher monthly payments later. Another trick is to deduct all of your legitimate business expenses, even the really small ones like office supplies. You want to make sure you get your mileage, your subscriptions. Everything here is going to reduce your net income. The IRS often overlooks expenses that aren't documented, so provide receipts, or at the very least, you want to include a profit and loss statement. Form 433A is the IRS's financial x-ray. Every line tells them how much you can or can't afford to pay. You want to fill it out very carefully. You want to back everything up with receipts or expenses or invoices, whatever you got. And don't guess at the numbers. You really don't want, this isn't the time to be fudging the numbers, okay? Listen, if this feels overwhelming, that's because it is. Consider getting financial help before you sign this document and hand it over, because once it's in their hands, you can't take it back. Form 433 can be a really smart way to help you get out of overwhelming tax debt. Now, speaking of tax debt, I want you to know that there are special programs available to help you get a fresh start. But how do you know how much you can qualify for? You see, no two cases are exactly alike. So how do you know how much you can settle for? Well, lucky for you, I created a free tool to help you get qualified for a fresh start. All you have to do is go over to my website, www.levyking.com, Levyking.com. You want to answer a few questions and hit submit. Once we get it, my team and I will help you fill out and help you calculate your eligibility for a fresh start. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. Hey, that's it for this week, guys. Talk to you later. Bye.